Happy Friday, ladies and gentlemen, and welcome back. I'm your friendly neighborhood PM here to give you your top 3 market points of the week. Now, it does appear like we are trending upwards for the week, but I know you have places to be, so let's get right to it. At point number 3, it was Micron surging over 15% after announcing their quarterly earnings. Now, Micron came out and gave a surprisingly optimistic revenue and profit forecast, largely driven by surging demand for their memory chips. They are the largest U.S. provider of memory chips. And this is continuing to reiterate the further drive of AI demand. Now, one of their key products that is really driving this future growth that they're forecasting is their product for high bandwidth memory. So what this does is it allows AI systems to more rapidly access massive amounts of data to learn and develop. Now, in addition to this, demand is massively outstripping the supply that Micron can produce, allowing them to raise prices and lock in long-term contracts. So we haven't quite yet seen the end of that AI boom that everybody's benefiting from right now. At point number 2, it's similar tech. It's ARM Holdings attempting to buy Intel's product division. Now, you've probably seen a lot in the news lately. Intel has continued to struggle this year. Their share price has fallen, sales have fallen. They've continued to bloat with costs. And now further speculation has come out about potential takeovers, selling off parts of the business. Well, ARM Holdings, a chip design competitor, recently came out and approached them about buying their product division. Now, Intel has 2 main divisions. They have the product division that designs and sells chips for computers, servers, network equipment. And then they also have the manufacturing side of things, which is more of their foundry business. They are actually manufacturing the chips that they are selling. Now, there has been recent news that Intel is attempting to split those off, where the manufacturing division will be separate from the product division, allowing them to increase customers and potential investment. But right now, there hasn't been as much demand as that because they compete with Taiwan Semi. However, though, Intel has been approached by numerous other offers, such as Qualcomm attempting to potentially take over the entire company, as well as Apollo, the private equity manager, offering to invest in Intel as well. So right now, the chip maker, while a U.S. historical name, has continued to lag and continued to struggle over the past year. They have continued to try to cut costs, cut jobs, reduce their expansion plans just to try to survive and move forward. But it looks potentially like the days might be numbered as more companies attempt to get a piece of the company. And then finally, point number 1, and what kind of sent equity markets rallying, was China's stimulus. So the government of China came out and cut interest rates while the majority of the world has obviously been hiking recently. But they went ahead and they cut interest rates while also announcing a capital injection plan of roughly $142 billion into their economy, as well as announcing additional subsidies for new graduates out of universities. Now, this is all aimed to stymie the lagging equity markets that they've had over the past year, as well as to combat falling property prices in China. Now, property is one of the main sources of investment for a lot of consumers in China. In addition to these capital injection plans, this is also partially to combat the growing discontent because of these falling property prices in China. So the Chinese economy, once again, getting a lot of stimulus put into it, and that caused equity markets not only in China to rally, but globally, because they are such a key component of the global supply chain. Now, that pretty much does it for this past week. Now, what are we looking to for next week? Well, next week, we're going to be looking at labor market data. We're going to see non-farm payrolls, unemployment rate, jobless claims. We're much more keyed in on that recently, like we talked about in the prior video, because of all the comments from Chairman Jerome Powell and how intently the Federal Reserve is going to be watching the labor market data as they decide what to do with interest rates. So we're going to be watching that very intently, and we'll probably update that in next week's video for you all here. But that does it for this week's video. As always, if you have additional questions, please reach out to your financial advisor or dig into the written weekend review. And as always, please go and enjoy your weekend, and we will see you the same time next week. Thanks again. Bye.